Good evening, traders, and welcome to Price Action Trading School, multiple time frame concept. Today we will delve deeper into multiple time frame concept that is very exclusive to our practical naked trading that is actually Price Action Trading School. So multiple time frame concept is what we generally use in order to spot trends, to spot momentum, and so-called loss of momentum. Have in mind that multiple time frame concept is different in price action than it's how I do it, at least, and it's different compared to, let's say, MACD concept or any other time frame concept, because simply, guys, when you use indicators, you watch it indicators themselves. I'm not saying that it's not good, as you could have seen. EQ Murray Math is based on a MACD multiple time frame concept, but Camarilla MACD is based on multiple time frame concept for price action, and both of those have their own strengths. So MTF concept is a part of practical naked trading, and actually what I'm teaching you here and what I've been teaching you on Price Action Trading School is my practical naked trading course that was some time ago. It was not free, and now thanks to Admiral Markets you're learning the exact things you need in order to become profitable. So it's not just about charting and trading. We will learn a lot about time frame factors, about intermarket correlations, about all these things you need to know in order to become a fully fledged price action trader. Or if you don't like price action trading, I'm 100% sure that this knowledge, what you have from Price Action Training School, will be useful in whatever dimension you actually trade. Be it indicators, be it CALs, be it harmonics, be it whatever, guys. Price action is always helpful, and it's always good to know because it will make a difference between losers and winners, and between your own decisions. And of course, don't forget psychology. So stay tuned. First we go with risk disclaimer, and then we will proceed to MTF concept. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with us. Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, and don't forget that Forex is risky business. This should not be taken as advice. It's my personal opinion. This webinar is for informational and educational purposes only. Admiral Markets Supreme Edition is available to download at Trader's Room. Of course, by visiting this address, you actually can trade with our web trader. And don't forget that Admiral Markets is officially best MT4 broker. And final part of this disclaimer actually is this is very important, guys. So whenever you see your capital is at risk on my analysis, on my tweets, whatever, that's good because you trade and you are getting education from a broker that is fully regulated, and that's also your own protection. So agenda, MTF advantages, MTF 1 hour, 4 hour, how to align time frames. That is today's agenda. Now you might ask me why 1 hour and 4 hour? Because guys, 1 hour and 4 hour are for intraday and intra-week swings. Okay? Practical naked trading, okay, has also scalping and momentum trading, and we will cover it. Okay, we will cover it. I covered a part of it on Admiral Markets UK seminar that was held in London on February, and we were really visited, and people were asking for more. So basically the thing is that practical naked trading concepts are very useful. So stay tuned. Today we are working on MTF, and in the future we will be covering momentum trading and scalping. Now MTF is used for intraday and intra-week swings, guys. That's important for you to know. Intraday and intra-week swings. And when you do that, you will be able to capture all those good things that make for our successful trading decisions. Okay, so that's actually an excellent thing to know, and you will see why. So MTF advantages are aligning the trends. Don't forget what I've been teaching you all this time. Trend can exist on every single time frame, guys. Okay, and it doesn't matter whether you want to trade on 5 minutes or 1 hour. By trading 5 minutes, your targets are not that big, but with trading on 1 hour, your targets can be higher, but you need to align the trend. So if you want to trade actually 5 minutes, then you should watch the trend on 1 hour chart. Okay, and if you want to trade 1 hour chart, you should watch either 1 hour or 4 hour and daily cues. So today we'll be focusing on daily, 4 hour, 1 hour. Okay, we will be going through this concept, and I'm sure that you will like it, because you will see it's not hard. It's actually easy to align all those time frames. Just follow me carefully, practice it after I finish with this, and I'm sure that you will be fine, guys. So don't worry, be happy. Aligning the trends, aligning momentum, aligning the targets. This is important, guys. If you don't protect your trade, if you don't manage your trades, well then I'm not sure that you will be such successful traders, okay? I'm not sure, simply because, guys, adding to your winning trades or adding to your losing trades can make a difference, guys. And I'm very sure about it, because I have been trading forex market for a long time, and I know what I'm talking about. So always watch time frame alignments, and never ever forget the power, actually the real power of charting. And there is no system that can tell you what price action tells you. Of course, SECU, HARP, everything is good and we do it, but it's based on price action, guys. And this price action training school will open your eyes on some new sites, you will be able to see the whole wood, not just a single tree. Because major mistakes in analysis and picking the entries, not mentioning money management, will come if a trader does not see a wood, but only a single tree. You need to have an eagle eye and fly like an eagle and watch the whole picture. So because of that, we use multiple time frame or multi-time frame analysis with all these important things that are mentioned here. Aligning the trend, momentum, target, stops, and finally cherry picking entries. How do we cherry pick entries? We cherry pick entries by defining confluence zones, and that lesson will come in a due time. Until confluence zones, we have a lot more to cover. Why use multiple time frame analysis? Because you are using hard time frame trend for trading the price. You are waiting for a pullback momentum. It's important for you to know that you are actually waiting for a pullback momentum. Because if you want to go with trend, you wait for a pullback. Don't forget. Many traders forget that they should not take any trend trades without a pullback. simply because they're not patient. And if a trader is not patient, sooner than later, the account will be in danger. And all new traders will face it. I know 100% sure. But that is why you have me to actually explain why waiting for a pullback momentum is important. All successes and all those winning trades I've had in Forex market were simply born out of my own mistakes. And I have felt it. So that is why I can stand behind every single word I have. This is my own experience. And I want you to be good. I don't want you to be a losing trader. I want you to be good, profitable in the long run. But you really need to follow this, because this is how you should do it. At least when it comes to price action. Usable only within trend trades, guys. So waiting for pullback momentum is only for trend trades. You don't make breakout trades with pullback momentum unless breakout trade is a breakout pullback continuation or a breakout retest. If you want to make a positional trade to position yourself in the market, you wait for pullback. Do you know who does it also? Big banks, big hedge funds, big companies, big traders, guys. Institutional traders. They are waiting for a pullback to actually buy and sell. When you want to sell your own, let's say, car, or you want to buy an apartment, would you really go with the worst price, or you will wait for the price to drop or to, I don't know, go a bit higher in order to sell or buy? If you are buying something, well, then you want to buy it at a better price, and that means pull back. It's in real life also. If you want to sell something, you want to sell it higher, so you wait for the market to actually give you the most realistic and better price. And that is how you do in Forex market. It's the market, guys. It's nothing different compared to other markets, at least in those price principles. Price is always the same. You want to buy lower, you want to sell higher. And that is what you learn in primary school, right? Sell when the price is higher, or buy when the price is lower. It's a simple logic. And I still cannot understand traders who are just jumping in trades and going for a worse price instead of waiting. Still talking about pullback trading, guys. I'm not talking about breakouts, scalps. Because when you want to go in a trade, you definitely need to think whether you will make a positional trade or you eventually will go with a breakout or counter trend trade. It's different. Okay? The larger the time frame, the more likely and important support resistance levels will hold. And it's important for confluence, or so-called POC, that I've been extensively using in my analysis. Don't forget about it also. POC points, very, very important in my analysis concept. Okay? And that is what you should be focused at. Okay? Now, the question. Ilya was asking, do I remember? Yeah, am I recording the webinar? Yes, I do. So this webinar is being recorded, so don't worry about it. Okay, yes, being recorded. So everything should be fine. Next question is trade IMX, but trend or signals can contradict if trading multiple time frames. You put buy for one time frame, then sell on other time frame. No. It works differently. I will explain. It's totally different to what you were explaining. So, okay, it's not going like that. It's different. POC is point of confluence, and that is where we actually have a best possible level to go for long or short trades. POC levels on my analysis and POC zones on my analysis are zones where we will buy or sell the price. So those are the zones that give us best possible confluence to actually buy or sell the price. Okay? That is where you make entries. Okay, so how we do it on 1 hour time frame, we call it an intraday time frame. It has both advantages and disadvantages, but more advantages, of course. Big advantage is that it's suitable for both full-time and part-time traders. 1 hour time frame. There is a less chance of losing trades because, well, you don't scalp. When you scalp, when you have a bigger chance to lose if you don't know right about price action, if you don't get into right momentum, and if your timing is wrong. But when you do positional trade on a pullback, then there is definitely a less chance of losing trades because 1 hour is the best, the optimal time frame when you do it intraday to intra-week trading. Don't forget that intraday trading is 1 to 2 day trading, and intra-week trading is actually full week of trading from Monday to Friday. Trailing stop is possible by using intraday time frames, so you can use trailing stop. It's good. Another thing to watch is an overnight risk. You don't want to risk a lot because also of overnight risk. Anything can happen during Asia session, especially if you trade yen pairs. Yen heavily is correlated to equities, and any move in Nikkei, ASX 200 will move yen pairs. Don't forget it. I know that a lot of people will not tell you that simply because most of traders and analysts don't know anything about equities, and they simply put RSI and I don't know which kind of EMAs or MAs or indicators, and they think that they can analyze the price that way. No, it doesn't go like that. When you analyze the price, you need to take care of equities, especially if you do the analysis on yen pairs, because yen is heavily correlated to equities market. And I will be always reminding you on that. And we will have a full price action class dedicated to equities versus forex. So don't forget overnight risk. If you do pound yen trade as I did last day, you probably saw my tweet, pound yen more than 100 pips. Well, that was because I actually took care of overnight risk. I had my stop loss placed, I had my everything was placed, and actually I expected equities to tank, and especially pound pairs, because pound was heavily influenced by news. So overnight risk, okay, exiting overnight, it can be a disadvantage because you probably will sleep, okay, and if you don't exit your position, intraday position, at least if you don't protect your trade, you might suffer U-turn from profit to loss, or from profit to break even. And also pay attention to swap if trading multiple pairs, because most of the time swaps will be negative. So you always can watch the swap table and can look into swap table with your brokers. You can always check it. So watch for swaps, okay, if trading multiple pairs, and always watch for possible double exposure, especially if you trade, let's say, euro dollar and dollar Swissy to the same side. Okay, you should never ever try to do that, because if euro-dollar trade goes well, dollar-Swiss trade will go bad. It's double exposure and you don't do it, okay? Atish has noticed that my voice is not clear. Can you confirm, guys, that my voice is clear? Maybe, I don't know, I think that my voice is good, but maybe it's, yes, Atish, it's your connection probably, so I have a confirmation that everything is clear. Excellent. Yeah, thanks guys for confirmation. So as I say, when you do multiple time frame analysis, usually you will do it on 1 hour or 4 hour time frame. Some people prefer 15-minute time frame. I don't know, I never did anything on 15-minute time frame except for scalping purposes. So for me, 1 hour intraday or 4 hour, it's basically a switch from intraday to intra-week, but it's also good. Now 4 hour and daily I only watch for cues, so daily time frame can give me good levels to watch for, and daily time frame can give me cues about a possible change of direction. So from this MTF perspective, daily I use only for spotting possible important support resistance levels, possible patterns which can give us counter trend trade opportunities or possible rejections. And on 4 hour time frame, I watch the trend and I usually align it with 1 hour chart. So that is how I do it, and so far it has been, well, it has been successful, because simply that is how price action flow is functioning. Price action on Forex market is the biggest advantage compared to price action on other markets, simply because price action in Forex market tends to repeat, and it will repeat because banks and other institutions need to put an equilibrium, and when prices are in equilibrium, it's always beneficial to all. So speculators and traders who are actually trading retail market can benefit from it, okay? So price always needs to be in equilibrium. For that, you should not be concerned, because other factors do that. Central banks, commercial banks, and traders, algos. You probably heard about algos. Well, algos will kick in usually, and when price is out of equilibrium, and they will put a price back into equilibrium. So yeah, that's about 4 hour and daily. About some other things that influence our trading, and disadvantages can be also overnight risk, because if you do swing trading, you will be carry over your trades during the weekend. It can be a bit of disadvantage, but also it can be an advantage if you do it correctly, because 4 hour time frame can give you also bigger profits. Macroeconomic risk also, well, some people simply don't bother with macroeconomic risks. Guys, if you trade intraday, intra-week, you are susceptible to actually economic risks. People who put their trades for like 1 or 2 years, they simply are not bothered with those news that can kick in during the week. But intraday traders and swing traders should be careful, especially because those risks that are associated with everyday announcements can U-turn the price. And U-turn is a complete reversal, right? So because of that, we actually use protection. The name of the protection is profit stops. And you probably noticed that on session recap webinars, I always say, guys, protect your trades. And if you visited our previous session recap, we had more than 300 pips so far. We had perfect trade with euro dollar. We had perfect trade with pound dollar. I also did an analysis on dollar Swissy today. that is also very, very, very accurate. You can check it. But I always say, guys, no matter how accurate it is, I'm teaching you how to fish, and you should fish it by yourself. I cannot manage your own trades, nor I want to manage your trades. I am here to help you make money. I'm here to help you and teach you how to trade properly. And what I can do is what I usually do, post on Twitter when price should be protected. And you probably notice that I do it before the news or when something big is going to happen. The thing is, all those time frames that we talk about, all those important things are nothing if you simply don't do a protection of your trade setup, and market is not the same as it was like 5 years ago and so on. So it's different market, and definitely because of that difference you should pay attention to, always pay attention to those most important facts besides simply trading the charts and making entries. Smith is asking, where can we check? Always and forever. It will be here. Okay, sorry guys, this was another message, and yeah, where can we check it? I will send you a new link, guys. Wait, actually the link is on Price Action Trading School. Yeah, here there was Price Action Trading School, and that is the channel on Admiral Markets YouTube, and you just need to switch it here. It's weekly Forex recap channel, and this is where you should check it. The link is here. Okay, this is the link, and please do it now. If you still don't know what session recap is, then do it as fast as you can, because those are free trades, those are free setups, and actually that is what you can always try to trade, okay, always, because those are the most accurate points so far I have been doing live, okay, because session recaps use Camarilla MACD principles that are also found on Practical Naked Trading, and you will find it very, very useful to you, okay? So that's it. You can always see pre-fact and after the fact things, Alan, so pay attention to it. I haven't changed the slide, Ethan, so it's still the same slide. I'm just answering questions ad hoc. So yeah, the question Martin is asking, equilibrium question. Are there any indicators like support and resistance that we can use to determine if price has gone out of equilibrium? Yes, Martin, that will be the subject in my future webinars, how you can actually see that the price went off the equilibrium and that algos can step in to actually correct the price. Very good question, Martin. Thank you for asking me. I will just write it down, so I will use it in my next webinars. That is a good idea, and I like the question, really. Thank you. Thank you for your question, indeed. So yes, the webinar about equilibrium. How to spot the change when price is out of equilibrium. Okay, that will be okay. Excellent. Because it's important. You know, guys, a lot of times simply traders want to short the price when it gets too high. But you don't do it, guys, because you cannot randomly pick the levels. Okay? You cannot randomly, let's say price has gone to, I don't know, 1.4650 on pound dollar. You cannot simply put a sell order because price has touched the level. Okay? It can go higher. So that is why you need to know about multiple time frame, confluence, historical now moment, price action. And of course, if price gets out of equilibrium like it did on Monday, guys, just follow the Monday price action on pound dollar. Now, let me give you a slight explanation. I know it doesn't have to do anything with this webinar, but I feel obliged to explain you. Price went to 1.4725 on Monday. That was out of equilibrium. And you know why it wasn't corrected? Because there was no one to correct the price. Banks were on holidays. And when banks are on holiday, no one is defending support and resistance levels. Price gets out of equilibrium, but as soon as the same banks are off the holiday, price gets back. And you notice that price came back, I think, 1 hour prior to London Open. And it came back like 100, 150 pips. So that was the scholastic example of out of equilibrium price. Was I only one who longed euro dollar? I don't know. I don't read other analysis, but I'm sure that I was really a rare example of analysts who actually went long on euro dollar last week. Everyone was looking to short it. No, I was going long. Because why? Because price went back. It was very close to getting back to getting out of equilibrium. And I was following the price action flow simply by using price action concepts. I warned you about counter trend confluence. And counter trend confluence spiked the price up for almost 100 pips. If price went back below 1.1070, I think that it would put it out of equilibrium at least for some time, but we don't see it at this point. Algos would probably kick in and correct the price later. And the same thing happened with pound. It collected all stops above 46.50. 47, guys, 47.10. No one was defending the pound. If it happened to euro dollar, well, I'm sure that today we would see again euro dollar up, because there is always a trend and there is always predetermined moment what the price should look like at the exact point. And our job as analysts, my job is to provide you with possible outcomes. Trading is not the same as analysis. Okay? Because trading, you need to worry about money management, you need to worry about a lot of different things, guys. When you do the analysis, you need to worry just about the price action flow. Well, how I do it. Confluence points and so on and so on. So, at this point, be focused on this, what I'm saying, and it will eventually, everything will fall out and you will understand this perfectly. Okay, now Ilya is asking, when will you display charts? Now, Ilya, it's time for charts. And Martin is saying, what a wonderful explanation. Thanks, Martin. Taiha is asking, what is the algorithm between yeah, I will show now 1 hour and 4 hour charts. And Alan Smith is saying he's downloading the session recap. Alan is your name, Smith is your last name. Alan, please take a look at whole session recap channel. You will always see pre-fact and after the fact. Because before I actually delve into this week's setups, I always mention and show how we went with and how many pips or losses we made with previous analysis. And most of the time it's a bit, I need to say, well, we've been very, very successful. Well, you will see the results and so on. Yeah, equilibrium will be one of my next webinars, so don't forget to sign up when you see it. So today's charts will be 4 hour and 1 hour chart. Okay, so let me show you guys. Let's go first with the 1 hour chart. Okay, so let's use simple. Oh, the voice is gone. Sorry, guys. I think that my voice has been muted. I accidentally pressed mute button. So, okay, as I said, I will repeat. We won't be using any indicators. This is multiple time frame, and we are just watching the price action. So, guys, here, this is 1 hour chart. What do you see here? Is this uptrend or downtrend here? I'm asking you, is this a downtrend or uptrend? Simply watch this 1 hour chart. Yes, it's uptrend. It's uptrend, indeed. Indeed, it's uptrend, guys. This is uptrend. See here, it's uptrend. Okay, you have, how you define uptrend? You should know that by now. Series of higher highs and higher lows. High, low. Higher high, high, low, higher low, higher high, higher low, higher high, higher low, higher high. And this goes up, it's clear. V-shaped reversal, it goes up. Okay? But it's uptrend, okay? Now, 4 hour time frame. Watch 4 hour time frame. 4 hour time frame is mixed, right? Okay, we have a mixed situation here, guys. Actually, the price is in a slight uptrend. You see, it's slight uptrend. But this tells us that actually we have a trend line here, okay, and that this can be actually potentially a short trade. I'm not saying now we won't be making setups, because for setups we need to have the analysis, confluence points, and so on. But simply for this perspective, this can be also leaned head and shoulders. Left, head, right. So this doesn't look like a good uptrend that we can see here, guys. See, this is much better, right? See here, much better. Okay, you can place a trend line here. Sorry, you can place a trend line here. Okay, here and there, it's being respected. Up, 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 up. Good. 4 hour, not that good. Okay. So we can say that 4 hour, it does 4 hour and 1 hour are not that aligned. Okay. So we move on to other pair. Let's see pound dollar, for example. 4 hour, guys, downtrend. And this is not a simple downtrend, guys. This is huge spike down, and I call it direct drop. When you see a direct drop, you wait for a pullback to actually enter the trade. Okay? See? And actually here we can see some form of weird looking head and shoulders. But here it's still some form of head and shoulders. Let's head right. Okay, see? Weird form of head and shoulders, but actually this is, you don't have to know about price action by a huge extent to actually assess this as downtrend, because this is, you watch this. This is huge. Now moving to 1 hour time frame. It's aligned, guys. You also see a downtrend on 1 hour time frame. Okay? So watch this now. On 4 hour time frame, we can draw Fibonacci, and we don't know when retracement will start, but let's say from this time perspective, we can place Fibonacci. Both two time frames are aligned, but you never trade with aligned time frames. Why? Because guys, are you really crazy to sell here? No, you are not crazy, because I'm teaching you not to be crazy traders. I'm teaching you to be fully fledged professional traders, and to do it as big banks do. Wait for pullback. Indeed, Nathan, indeed. You don't enter when time frames are aligned in the same direction. They need to be aligned with the trend. Here we have trend. Great, excellent. We also have a trend here. Excellent. But we need to align momentum. So we need to wait for loss of momentum and so-called retracement. Retracement is nothing more than loss of momentum. So now on 1 hour time frame, we know that this time frame can give us great confluence points. Okay? Okay, confluence points on 1 hour time frame. When you have this, guys, 4 hour, 1 hour, you can do the analysis on this pair, because this is good trending pair and will give you good trending entries. But you need to wait for the pullback. You need to wait for loss of momentum, retracement. Because why? Remember my first words from this webinar. Here, guys. After the pullback, after you have a better price to sell into, you don't sell now. Even if you think that it can give you money, no. We don't do it like retail traders. We do it like professionals. Okay? Ilya is saying he would place a trade at between 61.8. Well, I know why you are actually referring to that. But yes, please don't make hasty decisions. I know that you know a lot about price action and that you actually know some things that I will be speaking in the future. But now just be focused on this. Okay, so yes, the point of multiple time trading is we are aligning trend momentum and we are waiting for momentum loss, aka retracement, to actually position ourselves in the market. What does daily tell us? Well, guys, well, daily tell us that M pattern is very close. See, I was already talking about M, about chart patterns. So if you don't know what M is, please take a look at my previous price action trading school webinars. Here, guys, if you're in the trade, you would probably exit here at 330 because this is the breakout point of possible M. M is here. See here, watch it from this part here. And now this is the level where pound wants to get to actually see if there is selling or potential buying. So daily time frame will tell us that the price is heading down and we should be looking for short trade opportunities. Our final target is 43.30 because after this I expect some buyers to kick in, because in previous moment, near term history, the price has spiked from 43.30 to 47. Okay, guys? And even higher to 48. So what is the logic of multiple time frame analysis? The logic is if you are short, you still can short the pair because you have the room to next support. You also can see M pattern with a potential breakout from this part. And also you can scale out here or close your trades when the pound hits this level. Okay? And thing is, I'm not saying that you should buy, but I think that from scalping perspective, this should provide you with short-term trades on 5 minutes, let's say, to give you some scalping opportunities. Because I'm sure that when price gets this level, unless it's broken with huge momentum, let's say if UK voters decide that UK will leave European Union, then this won't help you. It will drop like a stone. So in normal trading conditions, and I'm stating again, in normal trading conditions, this should be the level to watch for potential exiting, potential scalp trades, or eventually protecting your trade. Okay, it's support on daily. It's significantly stronger than 4 hour and 1 hour. But because of that, we use daily for levels, general cues, 4 hour for trend, 1 hour for trend and momentum loss. Okay, so daily, 4 hour and 1 hour. Okay, now I will go into into price action training school, and I will send you the link for all my previous price action training school lessons here. Okay, check it here, please. And you will see what I was saying. Okay. Yeah. Okay, let's do a quick check of other pair. Just, I want you to actually understand what I'm implying here. Let's pick a random pair. I don't know, Euro Yen. Daily. Down, 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 down. Next support is here. It's sitting at support. So we are careful about shorting it. We need to see. Yes, it has 100 pips to support, so we still can short it. 4 hour is down, yeah, indeed, but it started to retrace. You see here, it started to retrace, so we put Fibonacci here. Actually, this was a weird swing high, but yeah, here. And 1 hour time frame should have a lot. Yeah, it's also started to retrace, and now we're looking for confluence of other factors on 1 hour time frame, because chances are that on that zone that can be seen easily on either 4 hour or 1 hour, I would go with 1 hour, will provide resistance and will be good for pips. Dollar yen, well, I covered already dollar yen. I told you to sell here, and I guess that you sold dollar yen. One of also of the winning trades, dollar yen. Let's do, I don't know which pair. Let's do Aussie New Zealand. Aussie New Zealand, very, very, very close to support zone. It looks like it wants to target this level, but you see here it's very close to actually previous low. Previous low was 061718, so this was previous low. Okay. Okay, here. And you see now, do you have time to short it? No, it's very close to support, so you don't short it. But the thing is, if this candle closes below this level, there will be opportunities to short it, because here below this level you have, well, not much. You have 30 pip till next support, 30 to 40 pip. But it's still good because you will be following 4 hour and hopefully 4-hour retracement. Hopefully 4-hour retracement. When it starts to retrace, watch 1 hour, yes, it will provide you possibly with loss of momentum. Okay, let's see next one. Ilya is saying he lost on the New Zealand trade. Well, Ilya, I explained it on previous session recap. Actually, Australian dollar New Zealand was very good, and if you saw what happened after my analysis, it hit stop loss and then it went in a good profit. But the problem is there was some news that actually spiked the stop loss, and because of that we lost the trade. But it was nothing because we also managed to make other pips on the other setups. So actually was not that big. Watch previous recording of session recap. I actually explained why it happened. But of course, guys, let me tell you something. Do you really think that I, as a trader, don't have any losses? Let me tell you something. A person who tells you that that losses can be avoided always is a fraudster, is a scammer, and you should always stay away from those kind of persons. Losses are normal in Forex market. And when you see my statement that I provide occasionally on Twitter, you know that I have losses, it's normal. But you need how to manage your losses, and you need to be precise with your entries, because that will make difference between losing long term and losing a short term. Okay? Ilya is saying thank you for last Australian dollar short. Yes, of course. And never ever think that you should trade without losses. It's not normal, guys. Losses are a part of trading, and it's good, because once you learn to deal with your losses, you will be more profitable because you won't be stressed. I've covered, and I will be, and I have been covering those subjects on webinars and on my blogs. So read the blog section on admiralmarkets.com, traders blog section. That is what I write, and you will always find interesting things that you can, and those are very beneficial to you. Let's do one more check and we can be over, finished. I don't know which pair to trade. We can do whatever we want. Pound Doddy. Daily chart. Well, guys, this is V-shaped reversal. Okay, but it's very clear that the price started to go back actually towards another downtrend. So here, okay, here we put some trend lines that are important. Here, guys, very clear to me now, just from multiple time frame concept, 9883. This is sitting at support now. If the daily candle close below this level here, you see it's being rejected. But if daily candle close below this level, that will be a signal for more shorts to come towards this spot, double bottom. Oh, this is very strong level. So you will have the room till next support, 240 pip. Watch for 4 hour. Okay, 4 hour could retrace a bit, and you wait for retracement to start on 4 hour. Once retracement starts, you put Fibonacci on most obvious previous swing and go to 1 hour time frame looking for confluence points. Okay? So I wouldn't be trading pound dollar to the short side unless it makes a pullback on 1 hour time frame. So guys, focus on multiple time frame concept now. Don't ask me, should I put a buy limit, sell limit order, because that is not the point of this webinar. For those kind of questions, you can always ask me on my session recaps. I do live trading with you, giving you analysis and sort of signals, right? So yeah, you can ask me. But now guys, please don't do it, because this is just from time frame perspective. Once more to resume. Daily for cues, support, resistance levels. 4 hour for trend, 1 hour for loss of momentum. Occasionally for swing traders, you will see some patterns also on 4 hour. But the optimum is to find trades on either 4 hour or 1 hour. As you could have seen, I usually do 1 hour because I trade intraday, but using this concept, your 1 hour trades can be extended to 2 or 3 days, as we do on our session recap webinar. Thanks, Ilya and guys. So we learned about MTF. We learned how to watch it. Homework. Practice MTF trend scanning. Do your homework, guys. Because next to come is Price Action Training School Time Factor. Very important webinar. If you have any comments, guys, please feel free to comment and ask. This video will be uploaded tomorrow and I will answer any question. Okay? Don't forget to sign up for more webinars to come, and don't forget that I'm here to help you. I want you to be successful. Okay? Yes, Egils, daily time frame we use for clues. For general support and resistance, you need to always watch, do you have room till next support or resistance in trend perspective. And then you go to 4 hour and zoom into 1 hour to find best confluence zones. Thank you for listening to me. Hope to see you soon, guys. Cheers. And as always, trade safe.